supply the market with OMO auctions. Just today, again, CBN had offered 252 days and 36 days almost for 18% and 18.6%. Liquidity is also market. We have liquidity in the system as a result of the fact flow into the system. The CBO's market is quite active, just as a result of the OMO that was issued. For the bond auction, it's been very stable without a lot of movement. That's where we are at the moment.
Now, in terms of, you talked about the auction now. What are your expectations in terms of liquidity at the end of the day?
With the OMO auction results today, CBN sold over 217 billion in the market for 336 treasury bills at 18.6. So with that, and also the FX funding in the system, we expect the market liquidity, system liquidity to really drop. So with that, by tomorrow, we should be seeing a lot of drop in the system liquidity.
So what is your outlook for the rest of the week? Of course, the week is ending tomorrow.
Yeah, for the rest of the week, actually by tomorrow being Friday, we expect the trend in the market, that's a bullish trend in the market, especially at the short tenor of the yield curve to continue, except for any other inflow or major outflow into the in and out of the system. We expect the market to remain at this level.
All right, thank you very much for your time, Ifeanyi. That was Ifeanyi Akweche, fixed income dealer with Wema Bank. Fitch Ratings has revised the outlook on Nigeria to negative from stable over concerns that a lack of foreign exchange will hamper the economy, and affirmed the West African nation's rating at B+, 4 steps below investment grade. The rating agency says while Nigeria's economy will probably grow at 1.5% this year after contracting by an estimated 1.5% in 2016, the non-oil sector will continue to be constrained by foreign currency shortages. The central bank devalued the naira in June last year, but continued to intervene to keep the currency at about 315 against the US dollar, compared with almost 500 on the parallel market. According to Fitch, trading volumes have increased since June but remain low. They were $8.4 billion in December, compared with $24 billion in December 2014. The agency maintains that while government debt remains low at 17% of GDP, the shortage of state revenues poses a risk to debt sustainability. And South Africa's sovereign credit rating could come under pressure if the country's economic growth and fiscal performance do not improve. This is according to the head of the sub-Saharan region of S&P Global Ratings, Mr. Conrad Rose. S&P rates South Africa BBB-, 1 level above junk status with a negative outlook. The rating agency also said it had little room to increase spending. South Africa also faces possible credit downgrades from Fitch and Moody's, and the Treasury has warned a downgrade to sub-investment grade could push borrowing costs higher, sink the currency, and hurt already ailing growth. Now, the Regional Energy Cooperation Summit organized by Energy Net Limited London is currently ongoing in Abidjan in the Republic of Côte d'Ivoire. The summit is an annual investors meeting focused on energy, infrastructure, and the financing of energy projects. Well, Channel's business news editor, Bosun Mofaye, is also attending the summit. But let's talk to the CEO, Energy Net London, Simon Gosling, who is also present at that summit. Thank you very much for joining us, Mr. Gosling.
Having me.
Now, tell us about this annual energy summit. You've been organizing the summit. What does it seek to achieve?
I think we've obviously spoken quite a few times, but over the last 10 years, we've been organizing country-specific investment summits, and the market's moving towards a more regional approach. I think what you're seeing across West Africa is a a more stable approach and a greater role for ECOWAS. I think what we see in Gambia right now, what we're seeing in Ghana is smooth transitions. You had a real issue in Gambia which could have gone either way, but you saw ECOWAS come in and play an increasing role, and I think that sent a really strong message to the private sector. So we're really trying to focus on regional development. You look at the smooth transition in Ghana, they've done amazing things. I think that's a real standout country for investors. It sends an incredibly strong message to the market. But I think for investors looking at regional stability, regional projects, that will further increase the stability of individual countries. I think we've got Nigeria really at the heart of this conversation, and we're looking here specifically at the Moroccan-Nigeria gas pipeline which is being developed, which, if it's going to take a long time, a lot of money, they're the conversations we're having. We're looking at some very large projects that are going to bring regional transformation, that are going to increase the stability and the investment opportunities in the individual countries.
Now, last year's summit was, of course, done in Ghana. Now, how much of some of these recommendations by the participants have been implemented so far?
Can you repeat the question?
Yeah, I said that last year's summit, the energy summit, was done in Ghana. And I want to know how much of the recommendations from the participants in this summit have been implemented so far.
Yeah, I think what we've done there is we've really looked at who the audience was. We've introduced a new dynamic. Our business is very much focused on electricity generation, and what the audience told us was, actually, Simon, you need to be looking at this much more from a regional perspective. In Ghana, what was different was we were looking at individual countries and presenting individual countries. Ghana is doing great things in regional transmission, so what we try to do here is look more at regional generation projects. One of the programs which we really believe in is the potential for an ECOWAS-owned, centrally managed gas IPP procurement program. Nigeria and the Nigeria-Morocco gas pipeline play a central role in that. A lot of our investors are telling us, actually, Simon, this is a project which we would be extremely interested in. So we're pushing those kind of conversations. We're listening to the market, and actually what we've done is, rather than focus more specifically on country by country, we're looking at a broader, more regional perspective.
All right, thank you very much for your time, Mr. Simon Gosling. Thank you for your time. We'll take a quick break now. When we return, we'll continue with the program as we'll be looking at the commodities. So stay with us.